Hey guys and girls, this is Dan with Tradingology, and we're going to cover a new ES or MES rather Futures Masterclass. So I'm going to go over a little intro. We're going to cover what these charts are later on down the road, but just for a backdrop, this will be what you're seeing. I am leveraging Tradingology for my execution, and I'm using Thinkorswim for the indicators and whatnot, as most of you know. So if you haven't met me before, my name is Dan, and I'm going to run through this. So what's getting me to do this is I'm creating this because a lot of people have asked me, can I trade, a couple thousand, 5,000, can I start trading? A lot of people would always tell them no. Well, there's ways you can do this nowadays. So I'm running through this exactly as someone would with a $5,000 investment in a futures account. So I'm going to show you exactly how I step through that. We'll show you, I got here emails from when I opened it up on March 9th. And then what I've done, these are my statements since trading this account. So today is the 28th, and this is as of through yesterday. So what I'm going to do is I'm going to record my trading next week and build this into the class so you guys can learn this and also repeat it for yourselves. It's a way of taking a $5,000 account, generating daily, weekly profits, and being able to do it in a repeatable fashion. So I'm not going to cover all the indicators today. I'll do that as we go along the process. I just want to give you the background here and show you exactly what's in these statements and the proof in the pudding. So what I did is I grabbed all these statements from my emails. I put them into a PDF here. So we see here March 9th is March 9th. This is when I actually established it. So this is the testing they do, right? They put in 12 cents and then pulled it back out. I verified that. And then here's, we're verifying this is a $5,000 starting account. This is a real account. Dorman Trading through Tradingology LLC. So it's Tradingology is where I'm trading, executing my trades. They usually come out before midnight, so this one looks like I got 2 on the 20th, but this is for trading on the 19th. So my very first day, I was getting used to or I shouldn't say the first day because obviously this is, the 19th. I opened it on the 10th, 9th, give or take. So these are the first real trades that I executed in the real account, just getting familiarized with it, and we started off with a bang because my first day trading, I actually hit stops and I had a 0 for 3. So my first 3 trades were a loss. I lost $116 that day. I was 0 for 3 and I was done. I hit my stop loss. I said, yep, I'm not trading anymore. We're done for the day. That's part of the rules. So rule number 1, if you hit your stop loss, you are done trading. Period. End of question. No over trading, no revenge trading. All you will do is make this number get bigger. And here's one thing I noticed just going through this is they don't make it look like you're, I don't see a negative here. What do? They put a DR. And I noticed, look, a DR is the same thing as when they're taking out my commissions, or their commissions, I should say, and their exchange fees and all the other fees that go along with it. So the DR and I had to look it up. I'm not an accountant. As you guys all know, this is not investment advice. This is showing what I'm doing and how it's working for me. And so no recommendation to invest in anything, educational, informational purposes only. I'll put the disclaimer up. Hopefully you probably actually saw that. I'll edit in ahead of time, but just to cover the bases there. But the DR, back to what I was talking about here, is even though I lost money, they don't put it negative. It's not a red number. I circled this red just for you guys to see it. But yeah, my very first day, 0 for 3, hit my stop losses, I'm done. So my $5,000 was down to $48.73 after the first day. No problem. We've been down this road before. Not every trade's a winner. So here we go. The next day, March 20th. Now we got better profits, or better results, I should say. Here we were 2 for 2. First trade, and the way they do these statements, it's kind of funny. But they listed in order of price. So I was short 2, a total of 5 and 5, obviously, for a profit of $45. So a little bit back. We're back about $4,900. And this was still getting used to it. Yeah, I did paper trade it. They have the ability to paper trade, but that's why I start out with micros. For those that don't know, we'll cover micros more later, but this is high level for what the masterclass is going to involve. Come to the next day, 23rd. We are at 2 for 2 again. Both shorting, so for entry, exit, exit, entry, exit, exit is the way this actually reads and how it went down. You'll see it as we do it live. $282 profit that day. So now we're another day in. So we'll continue March 24th. Here we are up this date. 57 and change. And then on the March 25th, which was, we'll look at our calendar quick. That was actually this Wednesday. So I had a few extra trades that day. We had a couple different setups. So I was in 1, 2, 3 times on the MES. And I was also doing some testing on the MNQ. Do not trade it until you are ready for it. Way more volatile on the NASDAQ futures, even on the micros. This thing bounces all over the place. I'll show you when we get to the actual trading. We won't probably trade it, but just show you what I did. So I was just doing some testing. I did one quick trade, made a couple bucks on that one, 13 bucks. But it was in and out, and it's all over the place. So the ES is much more easier to trade for beginners. And it's also the most liquid thing out there. So it's all based on the S&P 500. So the ES contracts as well as the micro ES contracts are extremely liquid. So you can get in and out at the click of a button, which is why we use this for our strategy. So at the end of the day, that was 4 for 4, 3 on the ES, MES, 1 on the MNQ for a profit of 120 on that day. So we're up to 5,300 and change. We'll come to the 26th here. This is more of a normal one. We're 2 for 2 on a Thursday. In and out. I actually got it in twice. Profits of just shy of $150. And then Friday, yesterday, we took 2 swings at it again. And I did one more testing on the micros for the NQ. And again, it was still all over the place. So I keep testing things before I do things long term. So that's why you see this is, 3-point difference. I was in and out very quickly. Only $11 in profit. Whereas the ES trades, I was 138. So for a total, after all commissions and fees, 142 for the week, or for the day, excuse me. And we are now up to 56.71 after 7 trading days. Total of 15 profitable out of 18 trades. So that's a pretty good run in my book. 671 and 63 is the total. That's over 10% return in basically a week and a half of trading. Not many places you can take that and I get those kind of returns and be in complete control. In and out, minimal risk. As you see it, as long as you play by the rules, and we're going to go over the rules all next week, you will be profitable at the end of the day. I put it together into an Excel sheet so I can track it and view it. So here's where we started. Open the account, flat at 5,000. The first day I took the dip. And then ever since then, we've been tracking back up. So now here we are at 56.71 total. So we see how it tracks each day. So I've put that all together. So that's kind of what we're going to look for and what we're going to cover in the ES or MES. I keep calling it just ES because everybody knows ES Futures Masterclass coming up. So we're going to show you exactly how I do that. The last one, just to give you a little taste of it, the gold line. Here's where I make my entries. And one thing I want to let people know that are covering this is I set up these levels and we'll go over how these are set. These are basically my entry points to the short side. And if it were going up, here's my entry points to the positive side. And then the green lines are where I'm going to take profits. So it's just a machine at that point. Enter, exit, exit, exit. If it starts going against me, exit before the profits are gone. So mental stop losses, hard rules, you just react. You don't have to think anymore. This is all set up ahead of time. You just do it. If it goes against you, then you're out. So I'll zoom in here just to give you a quicker close. The other point is depending on where you are in the world or the country, you need to be available between 7 and 11 a.m., give or take, Eastern time. So the market opens at 9:30 Eastern. I'm setting up these trades around 6 a.m. 5:30, 6 a.m. I'm setting the levels where I want to get in based on what we'll cover later. But then very commonly we see this one actually triggered 6:30 my time, 7:30 Eastern time. So we were in, then out, goes against. So that's how we're able to capture those profits quickly. And it gives you additional chances. So here is shortly after the open. I'll cover another rule is I typically do not trade the first 5 minutes. Hard rule because that's, they can shake you out. They whipsaw it back and forth. We see when the open starts here. But then the second 5 minutes or that's where we can start getting back in. So this was actually where this trade was the second round. So there was one trade, 2 trades, and then done. I won't take any trades, and we'll cover this again, but just briefly, I don't take any trades or I won't enter any after usually 10 o'clock my time, and I'm in Central Time Zone, so 11 o'clock Eastern. That's why I say 7 to 11 is about the window. You need to be available on a computer to watch this and get in and get out. You can be out, even before the market opens. I've done this many times where a trade triggers at 6 a.m. I hit my profit targets. I'm done. I'm done trading even before the traditional market opens. That's the other reason that I trade the futures, is I personally do it for tax reasons. Check with your accountant and your advisors on your situations, but there are tax benefits to them for people in the United States, as well as it trades 23 hours a day. So I have found the sweet spot is the few hours before the open. It's much calmer trading. You're in and you're out with much less stress, and you're able to be more robotic. So that's kind of high level what it looks like on the charts. We will cover them as we go throughout next week. I'm going to record one of these each day. And then if you have any questions, email us at support@tradingology.com and I will cover anything you need. You guys have a great weekend and stay safe out there. One other thing that I do is we do leverage, we see on these charts, I have a lot of moving averages that I have incorporated into it. So that's going to be a new thing for our long-term Tradingology members is, yes, I am still using the strong market indicators for selecting these levels. We will see that. Very interesting how they do often line up to how we're setting that. So the wrinkle cloud comes into play, as well as looking at the high level. I'll pull over a couple, so you always want to know where you are throughout the day. So looking at the indicators here, we'll swing it down here so I can see it a little bit better, but we won't cover up. Yeah, here we go, these guys. So this is looking at the last week, and just so you can see the advancing declining issues, the up and the down volume that's involved in those issues, and then the first couple internal indicators from Market Timer. So these are the ones that come with the complete Market Timer system. So I can use these as barometers so I know where we are in the day, whether it's going to be positive or negative, and having the bias for the shorts or the longs when we start crossing the levels. Obviously, when we're trending one way, that's also why we have weekly, daily, and 5-minute charts. So I know the overall trend is either up or down, where it's trending from a daily perspective, and then I get to the levels on the 5-minute for my actual entries and exits. But the barometers give us where is the overall market doing, as well as, so I would recommend, if you can, have 2 screens, but I have set it up and I'm going to give you guys everything. So I'll have these workspaces for you to have. You'll see how we build together these indicator sets. So once you have the whole system, you can get it going as easily as possible, but I will show you how to do it. It is a good thing for you to know how to install it yourself and not be reliant on, hey, I installed this workspace and it was all done. It's good for, you need to know for your own self. So I also look at high-level indicators for the oscillators, the MT synth to know where we are on 10-minute charts. Then you can toggle those to daily charts, as well as looking at where is the herding, where is the balance of power. Is it positive? Is it negative? So these all still come into play. I just don't use them once I'm in the trades. So they level set, or they kind of set the table for the day. Here's where we are. Here's where we finished. So if we look at these, we actually had, looks like a bear trap set up on the balance of power. So we'll review those as well. So these different indicators give us different biases leading into the next day. And then as you see, when we start setting the levels at 6 a.m. Central Time, 7 a.m. Eastern, that all comes into play. So I know we'll have higher probabilities one way or the other based on the overall market itself. So everything comes into a big picture, but now we're focusing down into specifically how we exit and enter micro trades for the ES. And I hope this is a good little intro for you. Any questions, you can let me know. And we'll be talking to you soon. Thanks, guys.